In this video, we'll look at plant assets, natural resources, and intangible assets, and the expenses they accrue. Plant assets are referred to as property, plant, and equipment on financial statements. They are tangible assets, which means they have a physical form. As well as being tangible, plant assets are long-term assets that will accrue depreciation. First, we will look at land. Land is the only plant asset that won't depreciate. This is because there is not a clear way to estimate useful life. The cost of land includes purchase price, brokerage commission, survey fees, legal fees, delinquent and property taxes, taxes assessed to transfer the ownership on the land, cost of clearing the land, and removing unwanted buildings. The original purchase, along with all of these things, make up the total cost of land. While land and the cost of land do not accrue depreciation, land improvements do. Land improvements are not included in the cost of land. They can include fencing, paving, signs, outdoor lights, and so on. This means that land and land improvements are two completely separate assets. Now we will look at buildings. There are two things to take into account when looking at the cost of a building. First is if the company is constructing the building. If so, architectural fees, building permits, contractor charges, and payments for materials, labor, and miscellaneous costs will be included in the building cost. If the company is purchasing an existing building, then the purchase price and any renovation costs would be included in the total building cost. The next asset we will look at is machinery and equipment. The cost includes purchase price, transportation charges, insurance while in transit, sales, and other taxes, purchase commission, installation cost, and testing cost. These are all included in the total because they are done before the machinery or equipment is up and running or being transported. Once it is up and running, all maintenance costs, repairs, taxes, or insurance are expenses. The last plant asset we will look at is furniture and fixtures. This can include desks, chairs, display racks, shelving, tables, and more. The cost of these is the purchase price as well as any cost to get the item ready for use, such as the cost to ship or the labor cost to assemble the item if needed. Natural resources are any assets that come from the earth. Some examples are oil, diamonds, gold, coal, and timber. The cost of these assets is the purchase price. Instead of depreciation, natural resources are expensed through depletion. It accrues the expense as the resource is used up or depleted. Intangible assets are assets without physical form. This includes patents, copyrights, trademarks, and other creative works. A patent is an exclusive right to produce and sell an invention. A copyright is an exclusive right to reproduce and sell books, like Harry Potter and Lord of the Rings, musical compositions, films like Ghostbusters, and Toy Story, works of art, or any other intellectual property. A trademark is an asset that represents a specific product, such as Nikon, Pizza Hut, and Lego. Intangible assets are expensed through amortization. This is similar to depreciation and depletion because it is still expensed. However, intangible assets have the option not to have an accrual account and can be credited directly to the asset account. Because there is nothing physical to dispose of at the end of its useful life, this is allowed. Plant assets, natural resources, and intangible assets are the types of assets a company can own. Depreciation, depletion, and amortization are the ways that they can be expensed. Thank you for watching.